Now, here's a question I've had for a while. Why don't companies who have direct incentive to get the best possible information on themselves, on the factors affecting their business, why aren't they using internal prediction markets if this is the best way to aggregate information? All right, this is going to be fun. Today, I have the pleasure of speaking with my friend Stephen Grugett. He's the founder of Manifold Markets, which has received a grant from Scott Alexander. Scott has written thousands of words about these guys, and they've raised a $2 million seed round. And it's an incredibly exciting project. So, Stephen, why don't you tell us a little bit about Manifold Markets?
Great. Thanks so much for having me on this podcast, Orkash. It's great to be on here after seeing other people like Tyler Cowen and David Deutsch. I guess first thing, I'm one of three co-founders of Manifold Markets. Um, but what we're doing is building a platform for user-created prediction markets. So the idea is that anyone can come onto our site and create a question about anything that they care about, and then they can have their friends and other people on our site come bet on that. And that the betting process through the magic of our like market mechanism will help get the best and most calibrated probabilities that you can find.
So let's talk about the mechanism here. So correct me if I'm wrong, but the idea is you use real money to buy manifold dollars. What is your reason for expecting that people will care a lot about how many manifold dollars they have? What is your hypothesis about human nature and reputation that makes you think this is something people are going to invest a lot of
Mm.
effort and time into calibrating?
Yes. So I guess to take a step back for people listening to this, Manifold uses a play money currency. If you sign up right now, we'll give you 1,000 Manifold dollars, which is our in-platform currency for you to use and bet as you see fit. But the reason why we think that play money can work is that people are driven more by status and competitiveness than greed. You know, we kind of see ourselves as a social game where people can come on to hone their skills at predicting and then demonstrate to others that they really do know more about what they're talking about, and they can prove it with an objective track record from their betting history.
Yeah, that's a very interesting point, which makes me wonder, do you expect that in the future Wall Street firms will be enticed to get the top people on the leaderboards on manifold markets to come work for them? One of the objections that Tyler Cowen has to prediction markets is, he's kind of tongue in cheek about this, but I remember at one point he saying, if you guys are so good at predicting stuff, you would expect all these hedge funds to be trying to constantly hire you guys. The fact that they're not makes me think that this is kind of just a hobby. This is not. I'm curious about your reaction. Do you expect people to be coveting these top predictors for their for their prowess at predicting the future?
Yeah, I'm obviously very biased, but I think something like that is possible. I think we have a leaderboard right now. Our top predictors are actually quite good. The person who's currently occupying the top slot won big on the on one of our markets on whether Russia would invade Ukraine in February. In the forecasting community in general, there actually is like as you would expect, a fair amount of overlap between the people who are using these services and financial professionals who actually do manage money or are trading as their profession. So don't entirely agree with the premise of the question or Tyler Cowen's earlier point. Although obviously as a play money platform, we do attract a fair number of hobbyists who, despite not having a financial background, still are quite good. I do believe that there's a lot of like untapped potential in these top predictors, and that sites like ours actually are able to identify them.
In your experience, what has made people who are the top predictors so good at the art? Is it just their domain knowledge? I know there's different theories about how people can get good at predicting. Based on your experience, what kind of traits do you identify here?
So, or probably a big one is just like experience. A lot of our top predictors have actually come from other sites and have spent a good deal of time thinking about forecasting and prediction in general. Probably the first hurdle that most people have to overcome in order to start improving as a predictor is getting used to clarifying and crystallizing your views about the world. If you're thinking about some political event, you can you can very easily incorrectly misremember that you got some event right or not. But if you're not like actively putting out like numerical predictions and recording those to keep yourself honest, it's very difficult to improve. So if you have to have that's a good first step, and a lot of our users already cleared that before joining our site.
We talked about whether if finance firms would want to hire these predictors, but it would be incredibly exciting if we lived in a world where news firms would want to hire the people who are very good at predicting. Scott Alexander actually has a very interesting post where he speculates, what if you had investigative reporters who could short, like, let's say they discovered that some government has really fucked up. They could, like, I don't know, short the market on the government's GDP in a year, and then release the information, and then benefit from having that from their investigative journalism. I don't know if what your reaction is to those kinds of
Oh,
ideas.
I think that's great. I think that's great. I think that's a very obvious case of pro-social benefit of markets using the market mechanism to, or in some ways, is kind of like providing a public good, or that wouldn't, society otherwise wouldn't be able to produce. Getting accurate information about, corporate malpractices or whatever is very valuable to society. Anything that we can do to encourage that is good.
This is the question a lot of people will be interested in, and maybe you can't comment, but is there any potential that eventually, through crypto or offshoring or some other option, that somebody's ability to predict will somehow be able to get reflected back on them in some sort of monetary gain outside of the play money?
Oh, on our site. Well, first of all, we are planning to do things like host tournaments with real cash prizes. That's something that we are able to offer despite being a play money product. We originally started as a crypto idea before pivoting back to Web 2. That's funny. We're one of the first firms to pivot from Web 3 back to Web 2 for like usability reasons. But real money crypto, creating a real money crypto offering is something that's on our back burner and something that's worth thinking about. That we're actively thinking about. It would probably be in the form of a separate product, though, rather than as an addition to our current offering.
I'm curious what the usability concern was there. Is it like connecting the MetaMask wallet to your account? Your current process is so easy. You can basically make a bet within 30 minutes or 30 seconds of visiting the site. I'm curious what the concern was there with crypto.
I think there are several things. The first is just like onboarding. Only a tiny chunk of the global population actually has created a MetaMask wallet or a Solana wallet or any of these things. And the process of doing that and transferring tokens to the wallet is actually pretty cumbersome and not yet very easy. So that's kind of a huge hurdle just to start with. Then you have to add in all of the other frictions associated with being a crypto platform. It takes a while for transactions to be confirmed. You have to, if you're doing everything in a purely decentralized way, will have to sign each transaction with your wallet, stuff like that. Each of those things is just like an additional hurdle, that will prevent users from, being able to bet and enjoy their experience on the platform.
Yeah, not to mention transaction costs, which would reduce
Yeah,
liquidity,
yeah,
right?
no, that's a big one too.
Yeah.
And
One of the things, speaking of reputation, one of the things that seems interesting to me, my prediction over the long term is that the reputation of the market maker or market creator rather will matter a lot because in your website, they're the ones who get to resolve questions or I mean, resolve markets. So, what is the equilibrium there? Because is it just that there's going to be a few trusted market creators who people trust to adjudicate what happened, or will anybody be able to create a big trusted market?
I think it'll be kind of a bimodal distribution where you'll see a few huge market creators that are high trust and have huge volumes across a lot of their markets. And then there'll be a very long tail of smaller individuals with less of a track record, and their markets will be participated on by people, closer to them on the social graph, their friends or friends of friends and stuff like that.
Now, here's a question I've had for a while. Why don't companies who have a direct incentive to get the best possible information on their, on themselves, on the factors affecting their business, why aren't they using internal prediction markets if this is the best way to aggregate information?
Yeah, this is a great question. So first of all, a lot of companies have tried using prediction markets internally, including Google, GM, the CIA, and a bunch of other firms as well. But for the most part, you find that they will use it. People will talk about it for a bit. They will even praise the benefits of prediction markets, but ultimately they'll abandon them. And I think the main reason for that, and the a very Hansonian point, is that people literally don't want to know the answers to a lot of questions. So in a corporate context, that mostly manifests itself in the manager not wanting to the manager choosing a course or vision for their company and then not wanting to get negative feedback about that. Even if the feedback is mostly positive, the fact, or like it still can like seed doubt on the part of employees, and the introduction of a prediction market by itself might just like lower the odds that that mission will be successful. Yeah, even though one wouldn't think that just the addition of more information would actually change the outcome. But I would say that that's the biggest point. It steps on management's toes, and they don't like that.
Interesting. It's almost the opposite of his point about consultants. So his point about consultants is that they basically put a pretty face from Harvard. That they allow you to say, "Oh, this, this highly credentialed person who talks well supports what I'm doing." So that's why we should go ahead and do it. Now, one question I've always said about this Hansonian view is, even if it's true, you would expect some firms to do the painful thing, or some managers to do the painful thing. I mean, you're a startup founder. You know that many of the most successful startup founders will go ahead and do something that is, quite difficult, that they don't want to do. And we would expect over the long run for the market to be dominated by players who have done the thing that helps their company, right? Out of all the thousands of companies that are out there. So why do you think in like a decade or two, all the best companies in the world will have internal prediction markets, or is the force from managers against this so strong that that's not going to happen?
So I would say there are two parts. I would say the first is a rational concern on the part of managers to not use prediction markets because it undercuts their mission. Part of it's not merely an irrational quirk of human nature, although or perhaps it is in general, but it's not an irrational quirk of the manager's part in choosing not to use them for certain contexts. The second part is they're actually, I think they're the areas where prediction markets more clearly add value without distracting from the mission or hurting management are where they're used for their informational aspects or to do like market research. Questions where you need to like survey a broad survey of like what consumer behavior will be, how our competitors will behave, that sort of thing. I think that's a much clearer example of where prediction markets can provide value in a corporate setting, which doesn't fall prey to most of these downsides. So, and then the question becomes like, why hasn't that happened yet? Um, and I would say a part of that is just like a part of that is actually just a usability concerns. It's actually very hard to create a product that's extremely simple and easy for like all of your employees to use that doesn't require too much thought but can still yield like reasonable results. And I would say part of our goal with Manifold really is to like bring the bar down lower such that more and more people can participate in prediction markets and it be a pleasant, fun, and easy to use experience.
Yeah, yeah, that it definitely is. I was about to suggest, maybe it would help Zuckerberg to know, maybe it's like subsidize the market to find out how many VR devices there will be in the world by 2030 to help him make his metaverse plans. But maybe he doesn't want to know that, or maybe at least he doesn't want that publicly known. So one question I have is, in what situations is it best to have a single person compound all the available knowledge, and in what cases is it best to kind of decentralize the decision making process by having a market?
Mm. I would say that in general, like if you're making a decision in the real world, it's often very difficult to operationalize what the success criterion is down into one thing that the market can then measure and be used to act upon definitively. I would say so that's kind of the biggest case for like personal discretion or like human involvement in decision making. So, or in general, I think like prediction markets work best when people are creating markets on a variety of metrics, and then using human intuition to figure out what the best course of action is to proceed using that information.
I'm curious, what is your opinion about insider trading in Congress, for example? I know this is like a big debate. Do you think it serves like a useful price discovery function or too much of a hazard of adverse selection? Kind of a tangential point. I'm just curious about your opinion.
Mm-hmm. I would say in general, my view of insider trading is, or I basically have Matt Levine's view, is that it should be viewed as a like taking from shareholders rather than a like fairness or equity type of discussion. I do think in general, like insider trading obviously does benefit price efficiency, but there are other things that we care about. We also don't want in general our corporate shareholders to be profiting from from certain types of information and others. In the case of like congressional betting or insider trading by elected representatives, I think that's for the most part not cool. We would prefer for them to be compensated directly through salary or other things which are more open and transparent to the public, rather than this is kind of a way of profiting, or like a roundabout way of corruption in some sense. You can make a deal with some company and then trade on that, and instead of the money never directly passes into your hands, but you're privy to this insider information, and the net effect is equivalent to this practice, which we would not normally condone.
Now, one place where I'm skeptical of prediction markets is when we're talking about questions that resolve over a long period of time and which there's no good base rate for, so the market hasn't really been trained on that kind of question. One example would be, what are the odds of catastrophic AI by like 2030, which I'm sure is a question on your website. And I'm not sure how much credence I put into the prediction on this question. I mean, one, because I'm not sure why I would expect that much good information to be aggregated here in the first place. Would it just be? I mean, what is the information they're going off of? And second, I guess more important is like why would somebody bet yes? Because the best case scenario, if they bet yes, is they die anyways, right? They have nothing to gain if catastrophic AI happens. So in these kinds of scenarios, what do you think is the role of prediction markets? Do you have these kinds of concerns? What are your thoughts?
Oh, I think, yeah, both of those concerns are very valid. I think part of this is just like a fundamental like human constraint. Is if things are very far in the future, we care about them less. It doesn't really, that's true in prediction markets, but it's also true in every other domain as well, and every other forecasting technique as well. The interest rate is like a fact about human nature, or like discounting of the future is like a fundamental facet of human nature. And you can twiddle with the mechanism here on the margins here or there, but I don't think it'll fundamentally change that. For your second point, though, your other point is very well taken too. That you can't like bet on an bet on apocalypse. You're not going to be there to collect your winnings. The money is worth less in that universe, so you should rationally bet against it.
Actually, so Brian Kaplan and Eliezer Yudowski actually do have a bet on an AI apocalypse. The bet is about whether there will be like, catastrophic AI. I think by 2030 is the exact bet. And so the Brian pays Eliezer now, and if by 2030 there hasn't been catastrophic AI, then Eliezer pays Brian, the sum that Brian paid plus more based on like the ratio of their bet, which I thought was which I thought was an interesting idea. Just going off this topic a little more, one of the things that Scott Alexander brought up in one of his blog posts is when you have these kinds of bets that resolve over long term. It doesn't have to be as far fetched as AGI. It could just be something like who's going to be president in 2024. He pointed out that at least at the time that he wrote it, Dwayne Johnson had like a 9% chance of being elected president, which seems high, except why would somebody get their manifold dollars held up in a question that won't resolve for 4 years, or I mean, 2 years now? The ability of speculators to correct prices is diminished because they don't want their money to be held up in questions that won't resolve for a long time. How are you guys dealing with that kind of problem?
Mm. I would say, like, so in general, the best way to tackle these long-term, more speculative questions is to try to break them down and address the proxy variables that are most relevant to predicting their success in the future. So instead of asking like, will the AI apocalypse happen in 2030 or like in 2050, you can ask like, will OpenAI's GPT-4 like exceed this number on this benchmark, etc. Or similarly for like The Rock, like instead of asking like, will The Rock be the president in like 12 years or whatever, 20 whatever, you could ask like, what are his polling numbers today? Like, what are his favorability ratings? Has he like will he indicate interest in running, show interest in running as a politician, et cetera, et cetera? And those are much more short-term questions which you can use to, get a sense of, of the longer term, more speculative questions that, that interest you.
Okay, so Tyler Cowen has this other criticism of prediction markets, that listen, these prediction markets are tied to financial markets that you actually could bet on, right? So I don't know if you think somebody's going to be has a higher or lower odds of being president. Maybe that has effect on GDP or something, and that has effect on stock prices, right? And so then he says, well, if you're so good at doing so good at betting in prediction markets, why don't you just bet in the financial instrument that are linked to whatever question you're interested in? And Brian Kaplan's response to this is, there's so many different things that can affect any given financial instrument that it's not easy to explain. Okay, because I think A about Dwayne Johnson becoming president, I can invest in asset B. I feel like that defense of prediction markets is a criticism of your response that you just gave, where you're saying short-term prediction markets can substitute for your interest in long-term prediction markets.
I would say yes and no. So like asset prices of of major financial commodities and equities and other instruments, are affected by way more factors than another prediction market on a more isolated question on some proxy variable that you care about. The nice feature of prediction markets is that you really can isolate the particular risk that you care about. And even if it's just discussing like one proxy variable that's related to the overall picture, you can still get a much better understanding of the thing that you care about by picking multiple well-targeted like proxy variables and creating markets on those, rather than like oil prices, which tell you many things, too many things.
Okay, so lay out your vision for me of like 10, 20 years. We have prediction markets are not only much more liquid, more people participate in them, and it's kind of everybody kind of knows what a prediction market is. So like people understand what it means when you say, this prediction market, Biden. I guess it wouldn't be Biden then, but whoever the president is passing this bill
We don't
had.
know.
Huh? Well, one of the many things that would need to happen, other than a constitutional change, would be major advances to longevity research. Um, oh yeah. So what would the world look like if people actually cared about prediction markets, and if it was like common knowledge what the market thought about any given situation that was happening?
Well, I would say first of all, I would say that would probably be a much better world. Across a wide variety of domains. I think it's better in nearly, but not all cases when people are grounded in terms of facts and like well calibrated predictions instead of like pure speculation or like ideologically biased thinking. Um, but more concretely, I can imagine a world where you the average like news article, blog post, CNN station, if that's still around in 10 or 20 years, has like an embedded prediction market on whichever topic that they're discussing, and it'll just like allow people to immediately get a sense of what like the most grounded or like it'll immediately ground the opinions that people are hearing in fact, and make it easier to have more productive conversations, and ultimately allow them to better understand the world.
I hope that's the case. There's a pessimistic take that people are not consuming politics to understand what's happening, or and that they will almost resent you for presenting them with this kind of information.
That's true. Or certainly, I'm not implying that a large part or even like a majority of the consumption of political news is based on a desire for accurate information. I think that would be a very, very naive view of how, humans operate. But at least a small part of that is. At least some portion of people's desire to consume news actually is to legitimately understand the world. And insofar as people are attempting to do that, prediction markets can help.
I really hope so, and I think that actually could be true, which is very exciting. So, one question I have is these trades that people do on your market. 4% of the 4% of what is traded or the traders' winnings, they go to the market creator, and 1% are just burned. Correct me if that's wrong. But that seems like a negative sum bet, which means that are you concerned that that would reduce liquidity because people have to get over a higher threshold of confidence before they're willing to bet on any given market?
Yes, yeah, like or fees impede the efficiency of the market in some sense. There are people who on the margins would trade who, if there were no fees, who don't when there are fees. That certainly is true. But part of the reason why we have fees is like to encourage things that we like. We have a creator fee. The creator earns a commission on trades that incentivizes them to create and resolve more markets. We currently have a liquidity fee as well, which feeds into the liquidity pool, which you can think of as subsidizing the entire market.
I'm curious how what is your background? So one of your co-founders is your brother. Do you guys have some sort of financial background or mathematical background? Because I was looking at so your technical documentation, and I'm not claiming to have understood most of it, but I saw the formulas that were there. I visually skimmed it, and did you how are you guys able to get into this field?
So I guess I studied computer science in school. Then I went to work for SIG or Susquehanna. It's an options trading firm for a little bit. Then I left to go work for my friends like Robo Advisor startup where I wrote their like their portfolio optimizing software. Yeah, so I have some financial experience as well, and all three of us are technical, and also have a previous background doing other entrepreneurial things as well too. So we're kind of like full stack entrepreneurs, I guess you could say.
Can you talk a little bit about your previous entrepreneurial experience? I think listeners might be interested.
Sure. So right before this, my brother and co-founder James and I were working on our app called Throne. It's a subscription group chat app for online creators. So people like you, or like Instagram creators or DJs or anyone who's built up an audience online. The idea was that they can set up a private group chat with their audience where they're paying a subscription fee to join. And basically, the premise of our app is that we provide a much better chatting experience for larger groups. So it's designed to accommodate like the creator's entire audience and make that a seamless experience.
Yeah, I have a friend who has a popular fantasy football channel, and he has a very profitable Patreon where, basically from the point of the Patreon is it'll give you the link to the invite to the Discord, which seems convoluted, and this product where you're just basically combining those two services, that seemed very useful. So what happened with that?
It's still going. Basically, we couldn't get the growth that we were hoping for. The ultimate cause is it's kind of too late. Like the creator market is already saturated with all different sorts of tools. Most creators are already monetizing one way or another and aren't keen on moving monetizing using a new platform.
So when it comes to the manifold markets, I mean, the idea for having prediction markets, even the idea for having prediction markets play money, I believe has been around for a long time, right? What took so long for somebody to make a user experience that was so comfortable as yours, or is there something else that prevented somebody from making a manifold
I would
markets
say
much
the
earlier?
Yeah, I would say the other key piece of the puzzle that other people were missing is the idea of user resolved markets, which on the surface sounds a little bit crazy, that you just allow anyone to come and create a market on any question where they are also the judge of that question and can resolve it in any way that they want. That obviously opens the door to fraud and abuse and people taking advantage of the system. And the fact that there is a possibility of fraud basically has prevented other people from like even exploring this option. Instead, they're opting for oracles or centralized authorities deciding the outcome of all markets. But of course, that like severely limits the scalability and reach, of a prediction market platform if users can't go on and create their own thing. So it's really realizing that user resolved markets actually can work, that led us down this path. There is a small amount of fraud, but it's actually quite small and manageable. If you allow users to choose which markets to participate in, they for the most part are making pretty good decisions about where to allocate their time and money.
There's this great essay called "Unix is worse is better." I don't know if you've gotten a chance to look at that. The basic point the author makes is, if you ask like why has Unix been so successful, you can say, oh, some of the features and some of the design decisions are arbitrary. They're somewhat inoptimal in certain situations, and then but then it seems that maybe it was those bugs that actually allowed Unix to be the kind of thing that can actually run on real computers. Maybe it's not maybe it's not optimal from the perspective of somebody who wants something super elegant and beautiful. And Gurren has a really good blog post about this. Bitcoin is worse is better, where he makes the same point about Bitcoin, like some of the I'm not remembering the details right now, but some of some of the actual constants involving like block size or whatever, they're pretty arbitrary. But the fact that just somebody just put out the arbitrary numbers meant that innovations that could have been around years before in terms of cryptographic tools actually got instantiated in a product like Bitcoin. And it kind of seems like you're taking a similar attitude towards prediction markets, even if it's somewhat arbitrary to let users resolve markets. That's better than having some sort of oracle structure which is super convoluted and hard to use and may sound good in theory but is kind of impractical as something that people want to use.
Yeah, that's it. That's exactly correct. I think the most important thing or not, or, not just for us and not just for prediction markets, but for creating a usable platform is making sure that the key mechanism is something simple and easy to understand, more so than handling every possible edge case perfectly. As long as the core experience is extremely simple and easy to use and user friendly, that matters much more than like the 1% of cases, where
but I'm curious if this is something you learned at your previous startup. Did you guys make this mistake and now you've learned to avoid it, or curious how you came to that realization?
I don't know that I can think of a good example that's directly relevant. Although we did like simplicity of I guess like both the business model and our user interface for our previous chat app were big considerations. The idea of having or like a subscription model is kind of like the minimum viable business for like a creator to support themselves in a real way over time. That might be one manifestation of this principle in action, but I don't know.
Okay, so one concern somebody could have about manifold markets is, you said you were giving out 1,000 manifold dollars. Somebody could, just I don't maybe even make a bot that I'm not giving anybody ideas, but make just like create 1,000 different accounts, make different trades on all of them, and or make a sequence of different trades on all of them, and in one of them they just make a series of the best trades that anybody has ever made on the platform, and now they're on the top of the leaderboard.
It's certainly true that if you're giving away free money, that's not a economically sound mechanism. We currently do some things to prevent abuse and like bot behavior. I'm not going to tell you what those things are. If we end up open sourcing our code, though, the cat will be out of the bag. You can see for yourself what abuse practices we have in place. I would say that we're not necessarily committed to maintaining our, free giveaway or like free sign up bonus indefinitely. Part of that's definitely partially a growth and like just starting off thing. In the beginning, most of our users are have been very well behaved and haven't abused this system. If more and more people, if Manifold becomes like a key nexus for people trying to weigh in on the future, we may have to be more strict with our policies.
It kind of reminds me of the PayPal story where they were giving like $10, $20 bonuses for people for signing up, and basically meant they got exponential growth, but they were losing money faster. I guess in this case, you're not like losing real money, but I don't know, maybe you're diluting the reputational value that the best people in the leaderboard have, at least for now, maybe.
Yeah, I would say one of the other things that we're interested in, or like the concept of a global leaderboard becomes less important over time the larger our site gets. A lot of the markets that people bet on are personal markets or markets between friends. What you as an individual care about in terms of, ranking who the top traders or predictors are really is not all of the markets that we have on our platform, but the subset of markets that are of interest to you. We actually just remove or like we yeah, used to have this feature called communities where you could create a community centered around a collection of different markets, and we would show the leaderboard just for those markets. And that's a way of judging, or it's a way of assessing the ability and skill of predictors within some particular domain that you care about, rather than globally. We'll probably bring that back in some capacity in the future.
Can you give an example of that? Like, I guess something like
Yeah,
fantasy
yeah. So
football or
one
something.
one thing you might care about is like who is the best, like Russia, Ukraine, who is like the best, like you like geopolitical and war predictor. And what the one way to assess that would to just be to like handpick a few markets about the invasion and the subsequent course of events during the war, and then just see how much profit people have made within those markets. And I think that that'll actually give you a reasonable estimate of who the top predictors are there, versus just like a global thing. For a while, one of our like top markets on our site was about whether this guy would allow, like, whether this stray cat would allow its like this random human to pet it. Totally random stuff like that. If you're trying to assess who the best like geopolitical thinkers are, who the best economic thinkers are, you may not care about the stray cat. But a lot of people really do care about the stray cat
Yeah,
in other contexts. So it's a it's
yeah.
a fine balance to strike.
Another interesting part of your platform is so people can buy more play money. Um, and I guess the concern is even within these subdomains where people are being compared, that the actual proficiency of a person could be distorted by the fact that somebody else could just buy more manifold dollars, and as a result may be able to have a higher profit. I guess you can measure it maybe by percentage gain on the total amount of money or something. But yeah, I'm curious on your thoughts about this.
So in general, I'm pretty pro efficient markets. If you think about what's happening when a whale comes in and buys up a huge amount of money and like bets it on the wrong side, what they're essentially doing is just like providing a huge subsidy and bonus to the people who are actually correct. Markets are a mechanism which is like the most efficient way of solving the whale problem. If you are too much money and you are not very smart and are very confident in your views of the world. Like the markets have a very fast and easy solution for you to solve to obviate that problem, where you will no longer have so much capital to throw about.
There's a direct analogy to this actually, as I'm sure you're aware, in like real markets, where like a pension fund or some other sort of big fund needs to like rebalance its books or something. So it'll need to just like dump a bunch of stock, and liquidity providers can make money off the big trades that that these big funds need to make. So I guess then you wouldn't be interested in schemes like, I guess, quadratic, like it's some decaying value of the manifold dollars that you can buy in one account. So like the marginal manifold dollar costs more than the one before it. You think this would inhibit price discovery, right?
Yeah. Although I have toyed with some other interesting like monetary schemes in the past. So one idea I had is introducing demurrage, or like basically negative interest rates on cash balances. So like you could imagine a world where like where your purchasing power kind of erodes over time. If you made a bunch of like really good predictions this year, it's not necessarily the case that you should be like rewarded by having all of that cash forever. Maybe some portion of that uninvested those uninvested cash balances erodes by 20% a year or something like that. I think it's a really cool idea in principle, but in practice, like users absolutely hate losing money for any reason at all. So it's kind of like a non-starter. Um, but it's interesting to think about.
Sorry, I'm not sure I understood. If the re-explanation is unnecessary, then we could just cut it out at the final. But just for my benefit, can you clarify what you were? Yeah,
Sure.
yeah,
So the idea is like at certain times you'll have just like uninvested cash, that's sitting in your account.
yeah, yeah.
Um, the idea is to just like charge you for that. So
Ah,
charge a sales tax at the rate of like 20% a year, but like maybe like once per day at midnight you lose, whatever amount that is, a small fraction of your uninvested cash.
Um, okay, so one thing that makes financial markets really efficient is you have these big firms that are putting up in large amounts of capital to recruit the top talent in the world, because it's worth it for them. They're running like these supercomputer simulations, and it's expensive to do all this stuff, right? But it's worth it if you're getting like 0.001% of a $1 trillion market. In the case where you have play money, what is the incentive for? I get that people who are hobbyists or are in other ways motivated to do this might choose to do it and like choose to engage in it themselves. What would incentivize somebody to put in the kind of effort it takes to have efficient financial markets and cost and time and so on?
Yeah, so I would say that in general, people are willing to put a lot of time and effort into virtual economies, irrespective of financial gains. If you look at things like World of Warcraft or earlier like Second Life, which has like virtual real estate, people are willing to invest the equivalent of hundreds of thousands or millions of dollars in this game world. I feel that people's ability to drill in and focus and work on things that are of interest to them, is just like a very, very powerful force, even if it's not directly tied to a financial payout.
So, what is the point by which Manifold's own internal decision making will be informed by prediction markets involving, I don't know, the firm's predictions about the firm?
Oh, it is already. We actively create markets on all sorts of things which are of interest to us. Most recently we created a market on whether we would be able to complete our fundraising round by the end of April. That was a cool market. The market believed in us for the most part. I don't think we like fell lower than like 85%, somewhere around there. Um, but we internal we actually do try to dog food our markets as much as possible. We have a new market now, and whether we'll be able to onboard 3 employees, I think before the end of June, something like that. That's a number that we like try to keep our eyes on. I guess probably the first big case where like the market actually substantively informed our decision about how to act as a company, was an early market we created on whether we should try to monetize by selling the play money. We initially we weren't sure whether that would be a good thing to do at all, whether users would hate it or it would seem scammy or whatever. But we created a prediction market on this subject. I think phrased in conditional terms that if we did introduce this, if we introduce the feature, would we keep it for some period of time? And the market seemed to think that we would. So that actually was a factor which played into our decision.
Yeah, I'm asking these questions in probably the wrong order, so this is probably one of the initial questions I should ask you. But talk me through the timeline of developing Manifold Market. So how long ago was it launched? And like, what were you said in the beginning it was supposed to be based on crypto. When did you guys change your mind? What is the timeline here?
Yeah, so this company began long, long ago, way back in December of
In a galaxy far
2021.
away?
Yeah, yeah, it's a very, very new company. Basically decided to ditch crypto after like maybe like a week's worth of speculation and research. Um, Mostly because or part of it is that we just thought we could build a play money prototype very quickly, and we could just like test that and see what the experience is like, and if we wanted to, we could continue further on into crypto. And partially is just based off of reading about the regulatory nightmare that is prediction markets and crypto, and partially is the usability concerns with crypto. But basically, we all like in the month of December, we came up with the original idea. Um, we applied and received the ACX grant from Scott Alexander, and we timed it such that right when the grant announcement came out, we had a working prototype of our prediction market system ready to go. And then we were able to onboard a bunch of users from the ACX community immediately, which formed the base of our platform. And since then we've been growing and responding to user concerns and improving our site to be ever more usable.
I know you guys use something called dynamic parimutuel betting system. I looked into the paper. I think I understood like maybe a quarter of it. So is was it like a experience of learning as you went, or is this something you guys were already familiar with?
No, definitely the former. We had heard I had heard of Uniswap and some other mechanisms. I had heard of like Hansen's log market scoring rule and some other things, but I didn't actually delve into the details until quite recently. Originally we actually came up with the idea for dynamic parimutuel buy or sell, thinking about it from first principles, and then we later like I went back through the literature and read a bunch of papers and realized that it was called dynamic parimutuel, and found a more elegant implementation of a dynamic parimutuel system based on a quadratic cost function um, that I hadn't considered previously.
Yeah, you'll have to talk me through it over dinner next time. Yeah, so you mentioned that you are hiring. Maybe there are some people in my audience who might be interested. So you want to talk about what kinds of roles you're interested in hiring for, what other kinds of things that might be involved in recruiting?
Sure, yeah, yeah. So right now we're looking to onboard a few people to our team. We're looking for full stack developers who preferably have a lot of front end and potentially React experience. We're looking for a community manager. That would be someone to help us manage our Discord, help write blog posts, help with our Substack, help reach out to people on social media, and organize online events. Someone with a previous background in doing this at a startup would be great, but we're open to people from other backgrounds as well. And then we're looking for a head of growth or someone who has experience scaling up an early to mid stage startup. We're looking for someone who who's helped take the company from to like 1 to $10 million annual recurring revenue, or around like 50,000 monthly active users, somewhere in that neighborhood. But yeah, if you are interested in prediction markets and Manifold in particular, I encourage you to reach out to us. You can either email us at jobs@manifold.markets, or me personally, Steven@manifold.markets.
Excellent, excellent. And any other topics involved with prediction markets or manifold that we have not discussed yet that you would like you want to touch on?
I guess one of the things that we've seen from launching this site is that users have come up with all sorts of like exotic ways to use prediction markets that we hadn't previously considered. So part of that, or like prediction markets obviously can be used on, predicting the future, basic yes or no questions. But some exotic things you can do are like getting users to help like research topics for you. Of in do You can create a market on phrase these types of things in a market-based way, and then people can propose certain answers and other users can bet on them. That's an interesting feature of our site. People have hacked our platform to do things like create lotteries, to play games. We did Manifold Plays Wordle, where we created a series of prediction markets on which word we should guess next. People, yeah, there are just like all sorts of other things, non-prediction type things you can do with this market mechanism, which are really cool.
That is an interesting idea. I'm not sure how that was conducted, but like I could imagine, researchers saying, Will my conclusion on a paper of this question be X or Y? And then to move the market, somebody would not only have to bet, but also like maybe put in the comment section the data that makes them think it's X or Y, which can be the basis of the paper. So you're basically getting research assistance. That is very interesting.
Ooh, yeah, yeah. I would say relatedly, one of the new types of markets we've introduced is the this concept of a free response market. So in addition to a yes or no market where you're just betting on something will happen, we have this idea of a free response market where you ask a broad open-ended question and people can submit an answer. And when they're submitting an answer, they're also placing a bet on that answer, and other users can bid up, different answers that the market creator will then choose. And that really opens up the space of possibilities towards allowing a much wider array of questions.
Stephen, thanks so much for coming on the podcast. And yeah, so that's manifold.markets, right? Any other places or links that people should be aware of?
I think that's the big one. Manifold.markets. You can join right now, and we'll give you 1,000 manifold dollars to bet on any market you like or create your own.
Excellent. Thanks so much, Stephen.
All right, thank you.